In this video, I am going to reveal a beautifully simple yet incredibly effective scalping strategy that prints opportunities every single day. The best part about it? It doesn't rely on a single messy indicator, and you don't need to spend hours doing long, exhausting market preparation. It is entirely rule-based. All you have to do is check off a simple 3-step checklist before pulling the trigger on a trade. Now, to prove to you that this system is consistently profitable over the long haul, I'm going to walk you through some real trade examples across highly popular markets like crypto, forex, and gold. What I love most about this strategy is that even though it stands perfectly fine on its own, you can easily plug it into your existing playbook, whether you trade pure price action, macro trends, or any other system, to instantly supercharge your performance. Adding this specific tool to your trading box could easily be a massive game changer for your career. So, what exactly is the secret sauce behind this method? Believe it or not, the only thing you need to build this entire system is just one single candlestick. Now, I know what you might be thinking. How on earth can one candle be enough to build a highly profitable strategy? Well, we aren't just picking any random candle off the chart. We are using what I call the 4-hour range. This is simply the distance between the absolute high and the absolute low of the very first 4-hour candlestick that forms at the start of the trading day. The core philosophy of this system is that when we are down on a lower execution time frame, like the 5-minute chart, we can actually use the boundaries of that macro 4-hour candle to locate high probability trade entries all day long. Executing this requires nothing more than that simple 3-step checklist I mentioned, and we're going to break down every single step right now. Let's start with step 1. Your very first task is to mark the exact high and low of that first 4-hour candle of the day. Let me show you exactly how I set this up on TradingView. First, pull up any chart you want to trade. For this specific walkthrough, I'm using the Bitcoin chart. Next, switch your time frame over to the 4-hour view, meaning every single bar on your screen represents 4 hours of raw price movement. Once you're there, navigate to the time zone settings located at the bottom right corner of your chart and make sure it is set to New York time. This part of the process is absolutely critical because our entire system relies on the first 4-hour candle being anchored strictly to the New York session open. Now look at the chart and find the very first 4-hour candle that printed on today's date. For example, if we look at June 23rd, the first 4-hour candle of the day is right here. All you have to do is draw a horizontal line at the highest point of that candle's wick and another line at the lowest point, extending both lines all the way to the end of the day. Just like that, you have your 4-hour range locked in. One vital rule to always keep in the back of your mind: you must wait for that first 4-hour candle to fully close before drawing your lines. If the candle is still ticking and moving, keep your hands off the mouse and wait for the close. Step 2. Once our macro boundaries are set, we immediately drop all the way down to the 5-minute time frame to hunt for our execution setups. The specific pattern we are waiting for is a classic fakeout. We want to see a 5-minute candle drive outside of our marked range, either breaking above the range high or smashing below the range low. But let me emphasize a golden rule here. The candle must print a full body close outside of the line. Wicks simply brushing past the level do not count. Once that valid breakout occurs, we patiently wait for the price to reverse, re-enter the zone, and close a candle back inside our 4-hour boundaries. Just ensure this entire sequence plays out within the exact same trading day. The moment that sequence completes, we shift directly to step 3, executing the entry. In our first example, the price broke out above the range high and then snapped back inside. This specific price action is a clear signal for us to hunt for a short position. When I enter the sell market, I place my protective stop loss right at the absolute peak of that breakout move. For my target, I always aim for a minimum reward to risk ratio of 2 to 1. Let's watch the tape play out on this one. And there it goes. Price rolls over beautifully and smashes our take profit target for a clean win. Let's look at another live scenario on the charts to really cement this in your mind. We are back on the Bitcoin 5-minute chart, and as you can see, step 1 is already taken care of. Our 4-hour range lines are clearly marked out. Now we move to step 2 and watch for our setup. Notice how price drifts down and pushes beneath the range low right here. However, if you look closely, the body of the candle stayed inside, only the wick poked through the floor. That means the setup is completely invalid and we do not trade. But look what happens shortly after. The market makes another aggressive pushdown, and this time a 5-minute candle closes its body completely below the range low line. That is the exact breakout confirmation we were waiting for. Now we just sit back and wait for the market to re-enter and close back inside the boundary. Right here, a bullish candle snaps back and closes inside the range, perfectly completing step 2. Now it's time for step 3, our execution. Because the price broke the floor and failed to hold, trapping all the breakout sellers, this is our trigger to open a long position. I'll buy right here, putting my stop loss exactly at the lowest point of that breakout leg. My take profit goes straight to that classic 2-to-1 ratio. Sure enough, the market catches a massive bid, climbs straight up, and hits our take profit target out of the park. Keep in mind, as long as we are still operating within the boundaries of the same trading day, we can continuously take more trades if the market presents another valid setup. As we let this specific chart play out, we can see that the price spends a long time trading well outside of our 4-hour boundaries. However, it fails to make a valid re-entry close back inside the lines until the daily session completely wraps up. That means for this particular session, our day was done after that single trade. But honestly, getting just one high-quality, textbook setup a day is more than enough to walk away with solid, stress-free profits. Now that you have the core mechanics of the strategy down, let's look at some real, raw trade examples across different asset classes so you can see the sheer power and versatility of this system. Let's start with the crypto markets. We are looking at the Bitcoin 5-minute chart again. With our 4-hour range already defined, price aggressively breaks down, closes below the floor, and immediately snaps back inside on the very next candles. That is our green light for a long entry. Stop loss goes at the absolute low of the spike, take profit is set to twice our risk, and the market rockets up to hit our target, locking in a smooth +2R profit. Later that day, price trades outside the range again, but it never gives us a valid close back inside before the day ends, so we sit on our hands. Moving on to the very next trading day, we reset and mark our fresh 4-hour high and low boundaries. Check this out, a 5-minute candle breaks above the roof of our range and then closes back inside. That is a textbook short signal. I'll place a sell order on the close of that candle, tuck my stop loss right above the breakout high, and target a 2-to-1 ratio. The market reverses instantly, dropping like a stone to hit our take profit for another easy +2R gain. But the day wasn't done yet. Shortly after hitting our target, the price falls off a cliff and closes entirely below our range low. We wait, and a few candles later, it re-enters and closes back inside the zone. This triggers a fresh long setup. I place the stop loss at the breakout low, set the take profit at 2-to-1, and once again, the market bounces beautifully to hand us another +2R win. Incredibly, the market gave us a third setup on that exact same day. The price pushed right back up, closed above the range high, and then quickly broke back inside the boundaries. This signaled another valid short entry. I set the trade up exactly the same way, stop loss at the high, take profit at twice the risk, and the market dropped down to hit the target, securing yet another +2R profit. Later in the afternoon, the market made one final massive dip below the range low before snapping back inside. This gave us another clear long entry, but we ran into a unique situation here. Because the breakout spike was so massive and volatile, putting the stop loss at the absolute low would have meant using a massive, inefficient stop. To adapt to these high volatility scenarios, instead of blindly using the absolute low, I scanned the chart for the nearest local key level to hide my risk. I spotted a clean, minor resistance turned support level right inside the leg, so I tucked my stop loss there instead. I kept my target at a strict 2-to-1 ratio, and the market hit it perfectly, securing another +2R profit. What a legendary day. Now let's move to the next day to show you the reality of trading. We have our 4-hour range mapped out, and the price breaks below the range low before closing back inside. This triggered a valid long entry. I placed my stop at the lows and targeted my 2-to-1 risk. But this time the market didn't follow through. It rolled right over and stopped us out. That's a -1R loss. I am purposely showing you this because I believe in absolute transparency. I'm not here to just show you a curated highlight reel of wins. You need to see the losses too because they are a natural part of the game. Later that very same day, the market presented a second long setup after another fake out below the floor. I took the trade, placed my stop at the range low, and set my target to 2-to-1. Price started to climb in my favor, but it ran out of gas, reversed hard, and slammed my stop loss for a second time, resulting in another -1R loss for the day. After that second stop out, the price never managed to re-enter the range for the rest of the session, wrapping up our day. If we look at the final data for this entire backtested crypto series, the results speak for themselves. Out of the 7 total trades we took, the strategy handed us 5 wins and only 2 losses, yielding a total net gain of plus 8R. That translates to an incredible 72% win rate in the crypto market, which is mind-blowing considering we are only using the most basic, unrefined version of this strategy. Now, obviously, to get a truly accurate statistical sample, you'd want to backtest this across hundreds of trades. I highly encourage you to go test it yourself, but this test perfectly proves that even the raw framework of this system is highly profitable in live market environments. Let's look at how beautifully this exact same strategy performs over on the Forex market. Right now, I'm looking at the EUR/USD 4-hour chart. To apply the 4-hour range to currencies, the process is completely identical. Drop down to your time zone settings, select New York time, and identify the very first 4-hour candle of the day. Looking at August 4th, that first candle is right here. Draw your horizontal lines at the high and the low, extend them forward, and your macro boundaries are ready. With that done, we drop down to the 5-minute time frame to catch our setups. Early in the session, price closes above the range high and then breaks cleanly back inside, giving us a valid short setup. I place my stop at the high and my take profit at 2-to-1. The market pushes against us and hits our stop loss, handing us a -1R loss to start the day. However, shortly after that stop out, the price tries to break out again, fails, and re-enters the range a second time, triggering another short entry. I set up the trade exactly the same way, and this time the market collapses beautifully, smashing our take profit for a +2R gain. As the day progressed, the market gave us another short setup after failing to hold above the range high. I took the sell, set my 2-to-1 target, and watched the market slide right down into our profit target for another +2R win. Unbelievably, EUR/USD gave us a 4th short entry later in the session after another failed expansion above the roof. I took the trade, managed the risk identically, and it resulted in yet another flawless +2R profit before the daily range concluded. Moving into the next trading day, we map out our fresh 4-hour lines. Early on, the price fakes out below the range low and snaps back inside, triggering a quick long setup. I buy the close, put my stop at the lows, and the market climbs directly into our 2-to-1 target for a +2R gain. Later that afternoon, the price duplicates the exact same behavior, sweeping below the floor and closing back inside. This triggered our second long entry of the day. Stop loss at the lows, take profit at twice the risk, and the market effortlessly hits our target again for another +2R win. After that, price broke above the range and stayed out there until the day ended, meaning our session was officially over. On the 3rd day of our Forex test, we marked our 4-hour range, but the price broke above the high and just trended upward all day without ever closing back inside. Because it never re-entered our boundaries, we didn't take a single trade, completely protecting our capital. If we tally up the final results for our EUR/USD test, out of 6 trades taken, we walked away with 5 wins and only 1 single loss. That brings our total net gain to an exceptional +9R, which represents an 83% win rate in Forex, an absolutely phenomenal result for any day trading system. Finally, let's see how this exact same framework handles the high volatility environment of the gold market. We are looking at the XAUUSD 5-minute chart, and our macro 4-hour range lines are already locked in for the day. Price makes a sharp run down, breaking below the range low, trades out there for a bit, and then prints a strong close back inside the boundary. This technically triggers a valid long setup. However, because that breakout leg was so deep and volatile, placing our stop at the absolute low would make our risk parameters way too wide. To solve this, I scanned the immediate area and noticed a clean lower time frame order block sitting right in the leg. I used that order block to hide my stop loss instead, targeting a standard 2-to-1 reward. The market respected the block perfectly and rallied straight into our take profit for a +2R gain. Shortly after that win, gold flew straight up to the opposite side of the court, closing above the range high before snapping back inside. This triggered a valid short entry. I sold the market, put my stop at the high, but the volatility caught us and snapped our stop loss for a -1R loss. Gold then spent some time trading above our range roof before finally rolling over and closing back inside, giving us a fresh short setup. Since this breakout spike was also on the larger side, I adapted by hiding my stop loss behind a nearby local resistance level instead of the absolute high. I set my take profit to 2-to-1, and this time gold collapsed beautifully, hitting our target and securing another plus 2R profit. Moving into the next day on gold, our 4-hour range is set. Price dips below the floor, re-enters, and triggers a clean long setup. Stop loss goes at the local low, take profit at 2 to 1, and gold climbs gracefully to hit our target for a plus 2R gain. A little later, price rallies up to test the ceiling, closes above the range high, and then breaks back inside, handing us a sharp short entry. Stop loss at the high, take profit at twice the risk, and the market drops straight down to smash our target for another plus 2R win. The market then made a micro break above the range high and instantly closed back inside, giving us a third consecutive setup. I shorted it on the close, kept my risk parameters exactly the same, and gold slid down to secure another beautiful plus 2R profit. Later that afternoon, the chart offered one more short setup after a final fake out above the high. I took the sell, placed my stop at the peak, but this time the momentum shifted, pushing up to hit our stop loss for a minus 1R loss. On the final day of our gold testing, the market broke above the range high, re-entered, and triggered a short entry. I took the trade, but it immediately failed, resulting in a minus 1R loss. Shortly after, it re-entered the roof again, triggering a second short setup. I took it, but the market stopped us out a second time for another minus 1R loss. But staying disciplined pays off. Gold pushed up one last time, failed to hold, and closed back inside the range for a third attempt. I stubbornly took the short setup, placed my stop above the new high, targeted my 2 to 1 ratio, and this time the market completely collapsed, plunging straight through our take profit target to hand us a beautiful plus 2R win to close out the session. Let's look at the final scoreboard for the gold market. Out of 10 total trades we executed on gold, the strategy produced 6 wins and 4 losses, leaving us with a very healthy net gain of plus 8R. That equals a rock-solid 60% win rate on one of the most volatile assets in the world. All of this data is undeniable proof that this simple 4-hour range strategy works phenomenally well across completely different financial markets. And remember, we were only testing the most basic, raw version of this system without even combining it with extra confluences like trend alignment or key supply and demand zones. Even in its simplest form, it brings in incredibly solid returns. It is definitely a strategy you should pull up on your own charts and test out for yourself. If you love the way I break down these mechanical trading concepts and you want to watch how I analyze the live markets every single day, I highly recommend joining my free Telegram community via the link down in the description below. Thank you so much for hanging out with me today. Appreciate your time, and I will see you all in the very next video.